Hello all, welcome back. Breaking, Bitcoin has just tipped back past $31,000. We're starting to see a little bit more exuberance return to the cryptocurrency markets after we've seen a well and long drawn out crypto winter. That being said, this doesn't mean this is currently the end of this current crypto winter or that we'll be moving into a bull run, as many people would lead you to believe. There's probably still a decent period of time in which we will see underperformance of cryptocurrencies versus traditional assets currently, as we are still in a risk-off environment. We still have rising yields and risk-free rates via the interest rate. For example, in the United States, the Fed isn't done hiking as of yet, or hasn't signaled that they are done hiking. And until we get macroeconomic factors that align to put risk on assets back at the forefront, we won't really be seeing much momentum. That being said, though, we are seeing a lot of news regarding ETFs, and this could actually be a major catalyst which sets off that macroeconomic backdrop that we really need to jumpstart the cryptocurrency markets yet again. Bitcoin equals human freedom was a quote that's recently come from the BlackRock CEO, and we've seen lots of interesting bits of interview snippets and headlines coming out from major CEOs of these asset management groups talking about how much adoption or how much built up demand, pent up demand there is for cryptocurrency assets via the use of exchange traded funds or ETFs. And again, that comes off the back of things like judges in the United States ordering the SEC to re-review Grayscale's bid, for example, regarding Bitcoin spot ETFs and other ETFs as well. US Court of Appeals orders the SEC to basically reevaluate several different of these Bitcoin ETF applications. I believe Cathie Wood as well has got some applications in there for some of her funds. They are still being reviewed. And there was some also clips shared of 𝗟𝗘𝗙𝗟𝗦 effectively not agreeing or denying that effectively the SEC themselves are reviewing multiple different applications at the moment for ETFs. And it does appear that their hands are getting tied in terms of pretty much they're going to have to accept these applications unless they find some kind of loophole within the system which enables them to push back their review periods. So it looks like we're getting closer and closer. Again, we can see here so much pent-up demand for Bitcoin, $200 trillion of institutional assets that currently cannot touch Bitcoin or cryptocurrencies for that matter until an ETF is approved. And that comes from the top 4 global consulting giant, Ernst & Young or EY. It's coming, and this is something I've been talking about before. Of course, Bitcoin will be first as a first mover in terms of an ETF style asset, exchange traded fund that enables money within traditional markets to purchase Bitcoin. Then, of course, following on from that, we'll have blue chip altcoins and other types of ETFs that represent different subsections of the cryptocurrency markets being wrapped up into financial instruments like ETFs. It's a floodgate that is effectively going to open very, very soon, and it will be a complete watershed moment once it does take place. It's something that we cannot play down and must pay attention to. Enough about the macroeconomics then of what's happening on the cryptocurrency scene. Let's take a quick deep dive into HEDERA, as there's been some recent stuff and recent headlines regarding HEDERA Hashgraph after we saw Q3 close out. Cumulative transaction volume from Network Genesis up until October the 23rd. Network Genesis effectively being the first switch on point from when transactions were being processed. It's effectively the first block. It's the creation of the chain. What we can see here, though, is a chart over time from 0 to 14 years. So, for example, Bitcoin there in the orange line, XRP, for example, in this pink line. And more notably, at the beginning here, from 0 to 2 years, we've got Solana, who had a massive amount of transactions, and HEDERA approaching its 4th birthday with just over 3 years now. A slow ramp up over the course of its creation, effectively. And then recently, that landslide moment that we saw of when we got projects like 𝗟𝗚𝗡𝗏 launching its use cases on the mainnet itself alongside some others. Of course, 𝗟𝗏𝗏 producing most of those transactions, and we get an absolutely parabolic curve, an exponent upwards, overtaking and making HEDERA the most used network that currently exists across all of the cryptocurrency space. And we can see that it's just continuing. That gradient, that particular line, the number of transactions that are being processed on top of Hedera are exceeding every other chain combined. Plenty of different infographics that I've done in the past on the likes of here on YouTube, as well as on Twitter, for example, showcasing that. But it's great to see that we are continuing this momentum and we are seeing more and more use cases go live on the mainnet. And of course, I'm sure many of you don't need reminding, but we've got many different factors as to why Hedera effectively is best in class when it comes to running transactions via the DLT itself. We've got the fixed fees, which of course is a huge deal for real world adoption and real world use cases. We've got the trusted, transparent governance. Again, massive for corporate adoption as well as real world use cases. We've got the gold standard in security, which is ABFT, which is effectively DDoS resistant as well as being leaderless. We've got high scalability without compromising any of that security. We're highly energy efficient. We've got EVM capability, Ethereum virtual machine capability, which means we can effectively port tokens between different chains as well as run Solidity smart contracts with things like DEXs and decentralized applications. You've got true finality within seconds. What is it, like 4 and a bit seconds normally? Native token services and consensus services, which a lot of these chains don't really see because they're either forks of Ethereum or effectively are competing in some manner. They don't have any of these native services that they offer themselves. And of course, the two of the big ones that are huge for retail and enterprise adoption are things like regulatory compliance, with Hedera having a great track record of honest ethics, which is really hard to say for the majority of other projects that we see on here, as well as one of the other big ones being fair ordering of transactions, which again is something that no other network really is taken very seriously or has run with effectively. And that makes a big deal when it comes to processing transactions on the mainnet, particularly for things like decentralized finance and decentralized exchanges, etc., happening for those real world interactions for retail. Not only that, we've seen some more information from Avery Dennison here saying they're thrilled to announce that 𝗟𝗦𝗡's connected product cloud is now among one of the first packed conformance solution providers, enabling Scope 3 tracking across the value chain. So effectively they're joining different organizations here and their use case is now packed conformant. Of course, 𝗟𝗦𝗡 running majority of the transactions and throughput currently we are seeing live on the Hedera mainnet. Just fantastic to see them continuing to expand this particular use case. As I mentioned about 2 minutes ago, we are still seeing some of those other use cases go live on the Hedera mainnet. There have been a couple of other topic IDs that have popped up recently that people are trying to work out who they are, processing several 100,000 transactions per month that we can currently see. Just wanted to bring this to people's attentions. Again, this is Real TPS, one of the particular websites. And again, reiterating what we saw in those graphs previously, Hedera, without a shadow of a doubt, is processing the most amount of transactions compared to any other layer 1/layer 0 competitor, even when we account for inaccuracies of transactions. For example, we all know Solana likes to count votes as transactions which aren't actually paid for by some customer per se, whereas every transaction on Hedera is directly paid for via those lovely fixed fees. But still see the transactions per second for Hedera completely sort of wipes the floor with the majority of the other chains that currently exist. Ethereum down there at nearly 13 transactions per second. Solana, okay, 450, Stellar at 60, and you got the Binance Smart Chain at 40. Hedera coming in nearly 1,300. And of course, we've seen that ramp up recently to as high, I think 17,000 we saw recently. I've seen in some screenshots. So there's a lot of throughput happening on Hedera, which is something to be very, very bullish about. Of course, as well, as I mentioned, TVL, that's increased quarter over quarter and year over year. Here's an infographic I dropped on Twitter. If you guys do use Twitter, you can follow me over on there on Dan Rees Finance. I do like to post lots of different infographics. I don't always share on YouTube directly because it's just easier to publish those on Twitter per se. But TVL, of course, is the total value of crypto assets locked within a protocol. TVL is a good barometer to measure the health of a DeFi project and a network's entire DeFi ecosystem. HBAR will continue to see further DeFi adoption as the network grows. What we can see here as well, though, is that Hedera concluded Q3 of 2023 with a total value locked of around $31 million. And let's not forget as well, we did have some incidents earlier in the year with DeFi where majority of the large decentralized exchanges were asking people to pool liquidity from them, and we didn't quite recover from that as quickly as we would have liked after that on-chain incident. Again, video on the channel covering what happened back then. Hedera's year-over-year TVL as well, though, growth stands at 75%, which in a vacuum is fantastic anyway, but when we start looking at it relatively, it surpasses the broader market by quite a lot, which has seen a reduction actually across the board during the same time frame of year-over-year. And again, TVL acts as an effective barometer for the health of a DeFi protocol, and us seeing a 29 or 30% increase quarter over quarter and about a 75% increase year over year speaks volumes about the levels of adoption we are seeing across the Hedera Hashgraph ecosystem and things like DeFi, decentralized apps, NFTs, etc. There is an awful lot going on and an awful lot of potential when it comes to Hedera for decentralized finance. Another great announcement as well, of course, there was a dedicated video on the channel, and I will be putting out some dedicated videos on the 28th or a couple of days in and around that once we do see the SaucerSwap V2 go live on the testnet first. So we're basically going to be seeing a beta of SaucerSwap V2. But again, dedicated video on the channel, check that out if you want to learn a little bit more about what's actually happening and what this infographic is effectively depicting. But as SaucerSwap Labs, the pioneering decentralized exchange on Hedera, begins gearing up for their V2 public beta on October the 28th, let's just take a quick recap at the benefits we're looking to see from this shift from an AMM to a CLMM and what this means for users directly. So we can see SaucerSwap is launching a concentrated liquidity market maker, a CLMM. It was a spelling mistake up there. Shame on me. Protocol based on Uniswap V3. What we typically tend to see from that is around a 530% LP yield, so liquidity provider yield. SaucerSwap V2 returns around 15.64% average real yield APR versus around 2.5% average APR, which is currently offered by V1. We're going to see a 60% emissions cut. This isn't directly due to the CLMM, but more so of the V2 proposal itself. This will see a cut to the inflation rate of those newly minted source tokens, so you should have more pressure keeping the price where it is, if not pushing it up, because they aren't being diluted by additional emissions. 4,000 times capital efficiency. This is a big selling point of a CLMM versus an automated market maker, which we currently are sitting at in V1. The capital efficiency, of course, allows for those trades to be executed with greatly reduced price impact in comparison to both centralized exchanges as well as stablecoin focused AMMs. Staking yield, potentially up to 50% increase, translates into the not only the single-sided staking APR, but also buybacks. And that's due to various tweaks via V2 with the mechanisms that are increasing capital efficiency. And of course, this is all being built on top of Hedera. And there are several other tools as well SaucerSwap will be looking to launch alongside this V2 proposal, which we'll be diving into towards the end of the month. I'm very excited for that to go live on the mainnet, as it gives a lot more opportunity to the DeFi ecosystem on Hedera directly. Rounding up the video then, I wanted to quickly focus on this as I did a dedicated video talking about the stablecoin studio and the different benefits. But Brady BM Gentile on Twitter or X over from Hedera directly has put together an adoption or usage tracking dashboard. You can see here it's clearly in beta, but it's on Metrica. So this will be going live on Metrica at some point. This is currently for the testnet and the mainnet is coming soon. The ultimate goal is to make these dashboards publicly available to the community. But effectively, the adoption is looking really, really good at the moment. Nearly 1,400 stablecoin studio tokens, lots of different stuff going on. And there was some recent information from Hashport, which of course is the bridging service. And one of the most bridged tokens we've seen over the last couple of quarters is USDC. So it's USD stablecoin assets effectively transferring to and from predominantly Ethereum and Hedera. So we are seeing that cross migration of capital between the two chains, which of course is very, very important if we want to see Hedera continue to increase its retail adoption and the DeFi ecosystem. And of course, we just looked at why DeFi is important for protocols directly. Anyway, hopefully you guys did enjoy this video. Like I said, make sure you subscribed as there's more information coming on that SaucerSwap V2 change that we'll be seeing over the next couple of weeks. And it should be very, very exciting for everyone involved. Drop a comment if you've got something to say. I do try and get around to as many of them as I possibly can. Until the next one, I'll catch you then. Cheers.